Hey folks, welcome to Pro Trader Strategies. My name is Eric Wilkinson and this is Spotting the Trade. So before you go, make sure you guys are hitting that like button. Smashing that like button actually feeds these bots that runs out and finds somebody like you to share this information with. So if you find something that's useful to you, it's probably useful to somebody else. So let's help them out. And subscribe over there at the side. Next to it, there's a bell. That's the one that is really important, folks, because that's the one that'll tell you when I come in unannounced. To like this video here. We're supposed to be going on at about 8:30, but I found a trade that I want to talk about for earnings. Later on this afternoon, we're going to be having some earnings coming out and we'll go talk about how to implement those trades into our portfolio for those quick hits. All right. So comment over there at the side. If you know of a earnings trade that you want me to talk about, throw it over there on the side. We'll take a look at it and see if we can find an opportunity there. So without further ado, let's get on with the economic data, see what's going on in the world and how that's impacting our markets here today. So across the pond, we did get some economic data late in the day yesterday, and it was in the form of, it was early this morning, coming in at the CPI, Consumer Price Index. This is passing on to the consumer, not all the way down to the retail investors. That is the PCE, which is personal consumption expenditures. That's going to give us an inflationary gauge for us as the consumer. But remember that the consumer price index does encompass some of the service sector folks that are purchasing goods to resell in the market. So over across the pond, Great Britain coming off just a bit of a tick there, but to 3.1%, expected to be 3.2%. And when you strip out some of the more volatile aspects of that, like food and energy, that's the core CPI coming in at 2.9%, expected to be 3% there. Now we're moving over here to the United States. A couple of economic data points that we're getting here today. It's going to be later on this afternoon. We're going to be looking for the crude oil inventories number. Something to note with that number, we've been seeing some builds there, despite the fact that we're seeing crude oil start to make those moves to the upside there in the broader markets. Something else to note here is with the equities. We've been talking about some of these pausing type of moves there in the markets. We're continuing to see those things start to set up here today. And Bitcoin continuing to move to the upside there in the markets. Something else to talk about. We've been saying that the markets can hurt most people as often as they can. That's kind of the mandate of the market here, folks. And we're going to probably see that happen to your portfolio here coming pretty soon. If we start seeing rising interest rates, something to note. Us as traders are usually focused on the equity aspect of our portfolio. But if you have a 401k or an IRA somewhere, a lot of those portfolios are going to have a weighting towards bonds. And that weighting towards bonds, as interest rates go up, it's going to significantly hurt your portfolio value. I'll talk about some things there that we need to really focus on, because that is something that gets sidelined in our portfolio and it really could be devastating to that portfolio value there. All right, so let's get on with the overall markets here and start talking about what we see happening here. Crude oil is starting to get a little bit of weakness. It's a little bit ahead of this economic data point. Remember, folks that have ridden this rally out are going to be a little bit nervous heading into this economic data point because they want to protect those gains. Now, with the bonds here, something to note: as interest rates rise, we will see the bonds fall. So you've heard me talking about these levers and pulleys here in the overall markets, folks. And what we're talking about with the bonds here is, as interest rates, if it's the eraser side, go up, then we see the portfolio value of those bonds go down. All right. So we need to protect that portfolio value. For instance, if you had $250,000 in bonds of your portfolio, as those interest rates rise, that value of those bonds will start to go down. So it will look like your portfolio value is going down. Now, keep in mind, if you have a 30-year bond, yes, you will get par value back if you hold it that long. But keep in mind, folks, that the average hold on a bond or an interest-bearing asset is only about 7 years. So if you think about in the next 7 years, if interest rates are going to continue to rise due to inflation, Something to note is your portfolio value in your bonds will start to drop. All right, so we're going to have to keep an eye on that. I show you in my webinars ways to get around that lowering value. Well, you can't get away from that value, but what we can do is hedge it by selling some covered calls against that, lower that overall cost basis on those assets. So please check that out at protraderstrategies.com. I have several webinars specifically talking about how interest rates could negatively affect the portfolio value when the environment is a rising interest rate environment. Okay, so gold futures making a little bit of a move here. Folks talking about transitory inflation, not so transitory today, and that's given bonds a bit of a boost to the upside. Bitcoin making new all-time highs today. Now, I'm not going to lie, I was expecting these things to move, but I was expecting Ether to outpace Bitcoin with all of the non-fungible tokens and things of that nature. That's usually the major way we're transacting for those types of assets there. VIX is coming off, and that's a bit of a surprise to me because to me, it looks like the equities are starting to see a little bit of weakness. On the flip side of that, folks, if you have a bullish sentiment here, you're probably on the right track because earnings are coming out and we've seen a pretty good number of our earnings already come out and they are beating. So better than half of the earnings are beating on the streets. That's giving us a little bit of a boost to the upside. We just had Netflix come out last night doing better than Disney in their space. That we have Tesla this afternoon. We'll talk about that here in a moment. Equities, again, making these moves. Now, something to note, I talked about yesterday, if we settled near the lows of the day, that was going to look like a continuation pattern. If we finished near the top, it broke that whole topping pattern here that we were looking at to have a lower low. It didn't happen, created a newer high. So that bearish pattern broken now. Things to note, keep your eyes out for these types of candles. Those are the ones that we're going to be looking for at these tops for a confirmation. We need a red candle right next to it coming in. Here we go. Overnight, nothing to wait or nothing to see here. Everybody waiting for economic data points today and getting a little bit of a boost to the upside. Like I said, if we're seeing weaker economic data, that might be a bit of a flip in our mentality here. The reason why is because we've been expecting higher interest rates, right? And they're thinking that they're going to be coming around the corner here imminently. Well, if we're seeing some weakness in the market due to the economic data and we're seeing inflation start to creep higher, they might be a little bit more dovish. Now, I think that could be bad down the road, but right now in the here and now, we have very dovish Fed governors, which means that they are going to hold off on that inflationary aspect. They're going to not worry about it as much and have more of a concentration on the employment mandate. Now, if they let inflation get away from themselves, then we could be in a world of hurt going forward. But Tesla doing very nicely on their earnings. That was Netflix. We've got Tesla here. I don't think I'm going to play Tesla, to be honest. I think that they will come out with better than expected earnings, and they're obviously going to talk bullish going forward. I don't think that they've ever come out and had a bearish earnings call. So I think that we're going to see a little bit of a boost and probably see that 900 handle everybody's been talking about again. Will we see the 1,000 again? I don't know. Well, remember, we did do a stock split, so that is in the books if you take out that stock split that we had just last year. Now, what I've done is played Las Vegas Sands because, as you guys know, I'm bullish in the this space, especially with the opening up of gambling on sports just about everywhere. I think everybody I know is talking about it. So I wanted to play this to the upside, take advantage of the implied volatility being elevated here, folks. Something to note, yes, we did see some volatility coming out when we started consolidating. I'm a bit surprised that we didn't have that elevated volatility, but we know that after an earnings, that volatility comes out of these markets even more. So I decided to stay in that with the mentality volatility is going to come out of this trade after the earnings and getting good strike location near those lows. I went into the October weeklies that expire on Friday because I want that massive theta decay and that volatility coming out. The volatility is the highest in those front months right now because of this binary event, this earnings call. All right. So I went in there and sold the October 39 puts in there for 38 cents. Looking for that break even to get lowered, 39. So right around $38.61 is my break even on this trade. Very close to that point of control. I would more than happy to be buying it down here at the 52-week low. The pandemic information, or the pandemic's behind us, folks. I think that these guys have done very well. If you think about every month, a lot of folks are getting these child credits, the stimulus money, all of that stuff, I think is finding its way into these casinos, folks. So I think that they are going to be doing very well going forward if we keep feeding them money. This free money is being parlayed, if you will. So that's the only thing I've done so far today. I will be keeping you guys posted if I find anything else out later today to implement into my portfolio. But right now I am doing these earnings a little bit early to get it into your hands so you guys know what I'm looking at. I usually enter these, and I would suggest entering these types of trades towards the end of the day, after the noon area, maybe even after 2 o'clock Eastern. So that way you get a very good strike location. With me, I'm a little bit early, and as this market comes off, it could start to hurt a little bit today. But again, I am looking at these as I would be willing to get long these casinos down at these levels. All right, that's all I got for you guys. If anything of nature was a benefit to you, please smash that like button and feed those bots to find somebody else to share this information with. And subscribe, hit the bell so that you guys get notification when I pop in unannounced, which I will be doing more and more often now that you guys are seemingly catching on to this whole thing. And comment, I will circle back around and chat you guys up. That's it. All right. Have a great day. And if you can't take that, take it easy.